Yeah.
Seriously, you guys don't have any cameras? Oh my goodness.
We're looking kind of rough, Eddie. Saturday morning.
Saturday mornings are not good for cameras.
I like to see your faces. I like to see your smiling faces, sign of success, I would say, right?
8 o'clock in the morning on the West Coast. It's 11 over there. You guys had the time to get it together. We didn't. That part.
Yeah. All right. Good deal. Good deal. Good to see all of you again. All right. So welcome to Saturdays with Eddie, and well, I guess today is Saturday. So we build the agenda as we go along, right? So, but I do have a few things, obviously, that I would like to go over. So I've got a few notes here, but we'll get to it here in a second as people join. I'm pretty sure that some people are still trying to read and understand that they need to register and get the link.
Mhm.
Oh, that's the other thing about the link. The link changes every week or every couple weeks. It's not the same. So should I keep it the same? I don't know. I don't know whether Zoom wants you to register, which is great. I like that because I'm able to reach out to you guys, send you the video and all that good stuff. And
Security issue.
yes, security. Yes, security is great, right?
Mm-hmm.
Cool. So what's happening with any burning questions, any comments, anybody have any success stories they want to share? I know there are a few horror stories, but I like to start with the good ones.
Yeah, let's hear some good stories.
Yeah, yeah. All right, cool. Well, for me, my week was great. It was excellent. I followed my plan throughout, and I have found that the times that I have followed my plan is when I am most successful. Even when the opportunities come in later in the day, I just look at them and I don't do anything with them. So my trading plan these days is trade in the first couple hours of the day, get out, go do other things, don't look at the market, because it can be either very, very good or very, very bad. So I try to get out there and make my dollar and get out. So
Eddie, what is the most effective, surefire way that you make your dollar
I'm
in
sorry, the
this?
most effective what?
Yeah, surefire way you make your dollar in this market. There are different strategies
Yeah.
and stuff. Which one do you employ the most?
Well, I don't know that I call it a surefire way,
Mm-hmm.
but the way I do it, I follow what I teach, which is basically get in at the support, get out at resistance, or get in at resistance and get out at support. And then I don't go all the way. I basically don't go for 100%. I go for 60%. That is a good number for me that I have found. I do calls, puts, debit spreads, credit spreads. Maybe twice a year I might do a butterfly. I don't like butterflies that much. They're good, they're all right, but they're too expensive, too much risk. So maybe this year I've not done any butterflies. Well, maybe not. I think I have done at least one. So,
Okay. And are
but
you using your targets, your support and resistance? You're doing that on the daily chart.
yes, I always plot on the daily chart.
Okay.
Nothing lower than that. If you
Okay.
if you plot on the say 15 minute, you can trade on the 15, which is what I do. I plot on the daily, but I trade on the 15, right? Because I'm a day trader. I get in and I get out the same day. Most people, however, are not day traders. They are swing traders, unless you're trying to. If you're a day trader, that's fine. You probably have a strategy, and and that's okay. There's tons of ways of making money. Some people look at the market open, they look at overnight, they see a direction, they get in that direction, they make a few dollars, they get out, they're happy with it, right? That's a strategy, right? And if you don't have PDT, that's okay. You can do that every day. You can do that several times a day if you want. But if you're swing trader, you have PDT restrictions, you're more risk averse, you want to gain consistent income or returns, then you probably are better off with swing trading, where you just wait for the right zone, you get in at the right spot, wait it out and keep going. That's the difficult part for a lot of people, the patience, just waiting for the right moment. And then I also recommend, don't trade every day if you don't have to. Trade 3-4 times a week, 3-4 trades a week, not times. 3-4 trades a week ought to be sufficient for most people to get their goal. Yeah. So let's see what's.
How close is close enough for getting to the support or resistance to get in a trade?
That's a good question. So when I talk about my perfect trade, I need a minimum movement, right? So if, for example, price goes down to my support and starts bouncing off support, I need to still have that minimum expected movement before I can get in. If it has left the zone and I no longer have that minimum, then it's no longer a good trade. And you have to balance that carefully because we are almost always waiting for that bounce. We only see that bounce before we get in. So that's a kind of a relative answer to the question, but I don't chase it. If it's left the zone by a lot, then maybe you shouldn't chase it. It also depends on the stock. If it's like Amazon, I know I have a lot of time or a lot of space because it moves a lot. If it's SPX, there's a lot more opportunities. If it's a stock like Apple, you don't have that much movement. You've lost it. If you don't get in the first few dollars, you've kind of lost that. So.
Well, how do people trade the same stock every day?
How about people who what?
How do people trade the same stock every day?
They move between
Can't be in a
zones.
buy or sell zone every day, right?
True. So there are zones formed every day, like SPX. There are people who trade SPX. Thanks, Richard. All right. People who trade SPX like me every day. I was just getting my Starbucks. Okay, where's my camera? That one. My sweetheart just brought it to me. Yeah, there we go. Now we can do this. All right. Like me, I trade SPX pretty much every day. And I find zones. So I should probably share my screen. And I'll share my screen here in a second. So yeah, I find zones usually on the 15-minute. You can do that. I like to plot, previous day, highs and lows, especially on the S&P E-mini futures. Those help me a lot to figure out where S&P could go, where it's going to, avoid things like that. I look at the Dow Jones to guide me, right? I look at the gaps. There's almost always a gap in SPX. Anybody notice that?
Yes.
Yeah.
Every day, almost it's almost a guarantee. It's not a guarantee, but it's always there. That's another nice one to play, and that's usually about at least $10. There's always about $500 to $1,000 in there. So
That
let's
would
see.
be a straight call or put.
Yeah, that would have to be a straight call or straight put, depending on what direction the market opens. So, what's up, Erica?
Good morning, Eddie. Yeah, I just wanted to, I guess, get in on the conversation of really how do you create your trading plan on a day-to-day basis? It
Yeah.
sounds like there's a gap, you'll do a straight call or put, but when do you decide, okay, today's a good day for a spread, either a credit or a debit? So in your couple hours of trading, how are you determining, I guess, what, strategy you're going to execute?
Got it. So I've got several trading plans. My trading plan, and I've got goals that I need to meet, right? I have a very, very low goal, by the way. My goal is only $500 a day, right? Most days I will hit that goal maybe about 4 times, give or take, right? Most days. So if I feel that gap and say fill it with, I make about $500 and look at the clock, it's still 10 o'clock and opportunities are just coming up, then I will do some calls, right? And because I no longer trade huge number of contracts, I usually trade 3 contracts maximum these days. I'm not trading 7, 5, 10 contracts. Those days are gone. This market will just crush you. So 3 contracts moving about $2-3 is realistic in the morning on SPX. Is that realistic on SPX? Yeah. And if you leave one contract running, say you get 3 contracts and you leave one contract running, I will only leave one contract running if I feel that the market is going strongly in that direction. That's the one that usually goes on and gets me that extra, $1,000 or $800, whatever it may be. And then as soon as I start seeing some red candles, going back up, or green candles going back, whatever the case may be, then I cut it and decide I'm happy with that. I'm good. But my moneymaker is usually that first few trades, those 2-3 trades. If I hit my goal in 2 or 3 trades, I'm good. I'm out. And I'm not shy to say I'm out, even when I see other opportunities, and they come all the time. So the discipline is simply staying out. Once you make your target, stay out. That's it. The next opportunity comes the next day. So does that help, Erica?
That does. Thank you. And I think when I try to go back in, usually that's when things mess up. If I just hit my goal, I need to learn to just stay out and be happy and trade the next day. But usually that's when I'll wind up losing more than I won.
You give back what you made in the morning, right?
Yes, exactly. Yep.
Been there, done that like a million times. So after so many times, I finally figured that, if I just, chill out, you made $500. Why do you want to go in? Why do you want to make this difficult? You didn't have $500 in the morning. Now you do, and you're itching to give it back. Don't do it. So
thank you so much.
Sure. And then in terms of the other strategies, I will employ some other strategy. Right now, I'm looking for a strategy, by the way. I am looking to figure out, and actually that's what I wanted to talk about, this market. Where is this market going? Where has it been? Where is it going? What do we do? Where do we go from here? What do you guys think? What do you think of the market? When you talk about the market, what are we actually talking about? What are we actually talking about? Let me see.
A ship sinking?
Momentum, like market momentum.
Okay, market momentum. All right. Let me see whether I can share my screen here. When we are talking about the market, we are referring to the general state of things, right? So let me make this a bit bigger. I'm sharing hopefully that's what I am sharing, my paper trading. Is that what you guys are saying?
Yes.
Yes.
Okay. This is what I'm talking about. This whole thing. Every once in a while, actually every day, it changes color. This thing is, it's got a mind of its own. It's either crimson red, all red, or mostly green, or somewhere in between. But when we're talking about the market, we are referring to everything that's on your watch list. Right now, things are going down, things are going up. So what do you do? Because I'm hearing people are asking, where is the bottom? That's what everybody's talking about. And when they say that, they are referring to the S&P 500. They're referring to the Dow Jones. So what you're looking at here is 3 years, 1 day. That's what I'm looking at right now. 3 years, 1 day. And you can see in 2020, right over here, this is right here. This is when COVID hit, right? Somewhere here. You'll remember that.
Yeah.
March 2020. That is when.
Yeah.
Let me see. There's a sound feature here that I want to take off. There we go. Okay. So if you, well, I don't want to say ignore this because it did happen, right? It did happen. So we can't really ignore it because, it's, you know, we're thinking about it again. But you notice that right after COVID, once we recovered or started recovering, we hit a few highs here and then tested, you know, that high, came back down, and then, you know, finally figured out that, you know what, it's all right, it's all good. So let's just keep going. So I can safely say that once we hit that, you know, approximate point over here, that things were okay. Maybe a little bit higher, I think. Once we broke out of it, I guess if we break out to, let's go with 3,600. Yeah, let's go with 3,600. These numbers, by the way, I'm just arbitrarily picking them up. I'm not really referencing anything. But you notice that over the last, you know, in 2021, we had a good run until, you know, that Christmas rally did not happen. Probably happened for like, you know, couple days here, about a week. And then what happened in January, we came back down. Normally, we don't stay down that long. If you notice, we just go, it forms small little amps, right? That's what I call them. But this year has just been terrible. If you bought a call over here thinking that we're going to go to 5,000, you should be at negative 10,000 right now. Maybe, right? It's all about that. But the question is now, every time we think it's gone down, it goes down even further. Yesterday we were looking at 3850. That was what I had called last week and said 3850 is probably low. I think I talked about 3700. I'm still talking about 3700. But yesterday we touched 3807. That was a little low, right? About 3810, give or take. So the question is, have we hit the bottom? Everybody's trying to figure out, everybody has an opinion. Have we hit the bottom? Even I have an opinion, right? Does it matter? No, because it's getting disproved every day. Every time I think I'm right on where the market is bottoming out, I see even lower. So what I'm going to do is, you know, that's the question. What am I going to do to prepare to get out of this market? Historically, we know that if you've stayed invested in the market, you come out ahead, right? If you have some long-term shares that you're holding, continue holding them if they're shares. If you have some long-term leaps, I guess you can't have a short-term leap, can you? If you have some leaps that are 6 months, 9 months out, I think you should hold them. You should definitely hold them. Don't cut them loose because they'll come back. But if you have anything short term that is bleeding, and it's short term, by short term meaning that it's going to expire within the next 1 month or so, then that one I don't know. I'm not really sure. You might want to cut the losses, or you might want to just see how it works. But the chances of getting better are slim, because there's a good chance. In order for us to fix this inflation, the recession has to kick in. What that basically means for the market is that the stock market is going to go down. So, but that's my opinion of the market outlook. Does anyone have an opinion, you know, one way or another, where we're going? Anybody have any ideas? Anybody had any news, any good news? Yeah, Britain is saying, oh, that's why you won't tell me when I ask. Yeah, because that would, you know, it's an opinion. It's really an opinion. Yeah. I'm also looking at the chat over here to see if there's any question. Louise wants to know, what's Telegram group link? I can't tell you, Louise. That one's private. That one is for alumni of Options with Eddie. You have to be an alumni. So, and then Powell 2% inflation. We get there. Until we get there, it will. Okay, Jackie, you want to speak to that? What does that mean? She posted something on the chat.
I'm trying to unmute.
Okay.
Well, he was talking about, when did Paul speak on, was it Tuesday, Wednesday of this week?
Mhm.
He was talking about the 2% inflation, until the market, until they get it in control, it's going to continue to go down, and it needs to go down to 2%.
Okay. All right. Did he give you any numbers about where SPX needs to be?
No, he didn't say anything about SPX. Sorry.
He should have, right? If I was there, I'd stick it to his face and say, Mr. Powell, realistically, where do you think S&P is going to be? What number are you looking for? But pretty sure his lawyers would be next question. Cool. So let's talk about a couple of things here before we get into a real agenda. Why are you guys trading? Is there a reason you guys are trading? I mean, have you looked at why you're trading to figure out whether this is still the right thing?
I'm ready to pay off my mortgage.
Okay, that's a great plan. How's that working?
Some weeks I do good, some weeks I lose.
Mm-hmm. But you're making that. You have a good plan. You have a solid plan, a real goal. I like that. So when you have a clear goal like that, at least you can measure what you're doing, and if by your own measurement it's working, it's helping you out, that's great. So I like that kind of goal.
Thank you.
Anybody else want to share why they're trading?
Hi, Eddie. This is Cecilia. How are you?
Good.
My plan is to pay off credit card debt.
Okay. Do you have a time frame for that?
6 months.
How is it looking right now? Is it looking like it's possible, or is it looking like it's you might need to push it a little bit? Are you ahead of schedule? How are things looking?
So if I stick to my plan,
Did we lose her? Or did you lose me? Are you still speaking, Cecilia? Anybody else?
we lost her.
We lost her? Okay. All right. So, but the last thing she said was that if she sticks to her plan, once again, you can see over here that it is very, very deliberate, right? It's not just random trading. If you're just doing random trading, you get random results, and you will not. You may or may not hit a goal if you have any. So. Some of the things that I wrote for myself here, why trade, when I asked that question, are you trading for income? Are you trading for retirement? Are you trading for fire? Are you trading for debt? Anybody know what fire is? I've talked about fire before. Financial independence, retire early. They're those people who, calculate their life, their yearly earnings, and then multiply that by 25. They're trying to get there so they can retire. But if this is if you're not in a state where your day trading is your income, if this is the only thing that you're doing, you need a plan. Well, I'll tell you what, you need a plan anyway. Even if this is not the only thing that you're doing, you need a plan, and you need consistency. That's the missing thing. I've said this again. A lot of you know how to make the money. There's tons of strategies in there, and you have to keep that money somehow, not give it away. Make it today, make it tomorrow, and then give it back the next day. That's not cool. So you need a plan. So how do you get a plan is a question, right? That's how do you get that? And that's where I come in. I come in to help you get that plan together. I'm very, very focused on goals. I'm focused on consistency. I'm focused on risk management, because I believe these are the things that are important for everybody who's a trader, whether you're a day trader or a swing trader. Once you figure out that plan, then you have more goals. You can reach your goals much faster, much what's the key word over there? Safely. I think safe is the key word over there. You want to get there slow but steady, slow but sure, right? The tortoise wins the race, right? If you're rushing to get there and halfway there you trip and break your leg, then you're out several months or several weeks before you can walk again and then start the journey. So yeah. All right. She's trading for income over here. I like that. Trading to be debt free and planning for retirement. Yes. Leave a legacy. Increase my bank account in general. I like that. Let's talk about that. When you increase your bank account, what next? With inflation right about now, is cash the best thing to stay in? I don't remember what the inflation numbers are, but if you're holding a large amount of cash, then it's a plus or minus. It just means that you're not losing, yes, but then again you're not gaining, because last I checked, most bank accounts are paying 0 point something %, which is not much. But I like the idea of getting to saving for a rainy day. If you don't have an emergency fund, that's a good thing. So you want to trade so that you can build an emergency fund. That's what I meant. Okay. Who's got a question?
You had started to mention cash is not the best thing to do as far as holding it in your bank account. What are some of the alternatives?
Some of the alternatives for cash. If you're holding, for cash. So let's draw some examples here. Let's imagine that you have an emergency fund, right? What's an emergency fund, first of all? An emergency fund is that money that you have readily available in case something happens in your household that you need some cash right away, something that you can immediately say, oh my goodness, that's an emergency, we need to fix it. And you're not pulling out a credit card, you're not going into debt to fix it. So first and foremost, you have to define what is an emergency, right? Christmas is not an emergency. It happens, right? Christmas happens when?
Once a year.
When? In December. So it's not an emergency. Right? Birthdays, here in the US we celebrate birthdays. I guess in most places of the world, birthdays are not emergencies. That new fancy dress is not an emergency, right? Your sink breaking in the kitchen is an emergency, right? Your bathroom faucet leaking, springing a leak, that's an emergency. And usually most emergencies cost somewhere around $500 to $1,000, maybe $2,000 if it's a really bad emergency. But it's the kind of money that, and I'm quoting here sources that I've read. I've not done any research. I'm just quoting like Market Watch and CNBC, places I've read before, that most emergencies are less than $2,000. Most Americans have trouble fixing emergencies with cash. So once you have that emergency cash, that's cool. Then you've got your 3 to 6 months living expenses, right? And that's relative. It's that 3 to 6 months that now people are questioning, should it really stay in cash? Right? Should it really stay in cash? And I am conflicted on it, because I also have an emergency fund, and then I have a 3 to 6 months fund. It's grown over time. Now it's more like a year to something. And I'm like, I got all this bunch of cash. What do I do with it? So I was speaking with my financial advisor, and he said, it's okay to invest some of it, right? It's okay to invest some of it, and you have to go low risk. And I asked him, what is low risk? So he said, well, if you're investing in bonds and stuff like that, then that is something that first and foremost you can get quickly in about 2 or 3 days. You liquidate, and the only thing that you're waiting for is for it to get to your bank account, right? And it is still making you much better. If it's only making you like say 5 or 6%, it is much better than the 0.1% that your bank or your credit union is paying you. you still need a bit of cash. So for me, my bit of cash means enough money to pay for property taxes. Those come once a year, so that it's not an emergency. So I've already got that, set aside. Other things that I'm expecting, I travel a lot, so I'm always going to have a little bit of cash on that, or for that. So that's what you should do. If you have more cash than that, then it needs to be somewhere invested. And then there's your day trading cash. Now, day trading cash, that one is relative. How much do you need to make whatever your goal is? For me, with a goal of about $500, I usually need about 10K to do that. Right, about $10,000 is usually sufficient. So what do I do with the rest of the money that is in my brokerage account? Stay in cash? No, that's when you buy ETFs and longer term securities. So that's what I would say. Now, this, by the way, I should have prefaced this and said that I'm not giving you financial advice. I'm not telling you to go what to do. I am not licensed. I don't have any initials after my name, saying that I'm a CFA or no. It's just started this with that. We just chatting. We're just talking. So educational and entertainment. So you have to evaluate your own personal and family situation first before you decide what to do with your extra cash. So does that help, Maureen? Does it?
Yeah, it does. What do you think about the US? I know you talked about it before, but the USDC coin.
Mm-hmm.
I mean, I know that's better than the bank. It's like 4%. I don't know where it is right now.
Yeah. So if you understand crypto, go for it. If you don't understand crypto like me, stay away from it. I am late to the game in terms of crypto. I have not done any crypto. I don't own crypto. Not that I am against it. I'm all for it. But as soon as I understand it, then I will trade it. But for right now, I don't understand it. I don't understand everything about crypto. What I do know is that the USDC coin is supposed to be, I guess, in the family of stable coins, meaning that it is pegged to the dollar 1-to-1. And that if you buy one USDC coin, it is worth however much you pay for it, or put into it, it's worth the equivalent amount of US dollars that you put in. The advantage, from what I gather, is that it will pay you 8%, 6%, whatever, different brokers, different interest rates, but it has a very, very high interest rate relative to your bank account. So that's one reason that you would want to, get into USDC coin if you want to save like that. The question is, the money that you put into your USDC coin, can it make you much more than that? Can it make you more than 4%? So trading, if you're investing it somewhere else, can you get more than 4%? I think the answer is yes.
Do tell.
I think it's yes. I mean, when I look at my trading, I'm out earning the crypto. So,
well, the money that we are talking about is the money that you made trading that you are not using.
Yeah. I hear you. So you're talking about over and above your trading amount. So let's say over a month you make 20K, right? And that 20K is not invested. So you have a good point there. You can put it in crypto, like your USDC coin, or you can put it in ETFs, or you can, pay yourself, whatever. That's your own strategy over there. So I'm not against USDC coin. If you have a good strategy for saving some of that, and it might actually make a lot more sense to diversify, have some USDC coin, have some ETFs, mutual funds, wherever. And it also depends on where you're trading. A lot of people are trading inside their retirement accounts, which might not offer you the ability to save, or to buy USDC coin. They've been talking about it. I think I saw something, was it Fidelity talking about allowing people to buy a crypto inside? I can see Erica shaking her head. So that's what they were talking about, right? And then all of a sudden, Congress is now interested. So I think once it matures a little bit more, it is mature. I just don't know enough about it. So that's one way that you could go. You could look even at futures. Futures is something else that you might consider doubling, especially if you have a job situation that doesn't allow you to be very active in the market during the day. Then that's something. Right. Cool.
Then can you elaborate some on leaps? I know we talked about that, but
Yeah. So leaps are securities that you buy that expire on a long-term basis. They are always options. They're not shares. You're going to be buying call options. I don't see why you would buy any put options for an extended amount of time. So it's almost always a call option. And there are several schools of thought about where do you buy your leaps, right? Am I sharing my screen, by the way?
yes.
Yeah. So let's go with. If I were to buy a leap today, what would I buy? Is a question. What would I buy? I think I'd go with SPY. SPY is one of them that I would go with. I'd go with something solid, maybe even some ETFs, maybe even if I were to go with individual stocks, I'd be choosing companies that I know are very, very strong. Companies that are not going to be, shaken too much by the movements. So leaps in general, like I said, those are calls. You're buying calls that expire at least a year away from today. And the idea is that the exponential delta that comes with that, say you buy a delta 50 to 70, that's what I recommend. If you go with leaps, go with delta 50 to 70. There are other schools of thought that say, go with a delta 30 minimum. I've done the math. It's still a good deal going with a delta 30, but I'm more for results. I like to see results. I like to see the money grow a little quicker. So I tend to favor at the money or slightly in the money. In this particular case, I guess a little deeper in the money. So I will more than likely go with a delta 70 if I'm going for a leap. The reason I would go with a delta 70, hopefully everybody's understanding when I say delta 70, yes? Is there anyone who does not understand that part? If you don't know what delta 70 is, go and put 70 in the chat. But going with that thought, so we'll go with that deep in the money or deeper in the money contract for at least a year. I like 18 months, 2 years and above. They're a bit more expensive, right? That's the thing. When you're doing this, you're not doing this with money that you need tomorrow or the day after or next week. No, this is money. First and foremost, you should only use these or buy leaps with profit money. I think I talked about this with another group. Do this with money that you have already made, not money that's coming from your savings account, right? If you have a good run, so you have a good month, you've paid yourself, you've done whatever it is that you need to do with your money, and now you have $2,000-3,000. Well, let's bump that up a little bit, maybe $5,000-6,000 extra sitting in your account. What do you do with it, right? A leap is a good idea. Is now a good time to buy a leap? Yes, it is. It is a very good time to buy a leap because this market is going to be down a bit more. But then after that, historically, what has the market done after it has been down for a considerable amount of time? It has rocketed, right? I'm not talking from just pulling numbers out of a hat. I'm talking about what the market has actually done. So the analysts are saying that once we see that turnaround, whenever that turnaround comes in, you don't have to time the bottom, and that's a good thing about leaps. You don't have to be at the very bottom because you're buying a lot of time, and so you can get into that leap for at least a year and a half. Make sure that you're buying at the low. Do not buy just today, right? Make sure that you go to the chart itself, Look to see, are you close to the low? Are you right about there at the support? That's when you get in, right? Don't wait until we are at $460 on SPY before you decide, all right, you know what? I think this thing for sure is going up. No, you trust the charts, right? You know that it's going to come back up here. Not tomorrow, not next week, not next month. But in about a year or less, 9 months, maybe to a year, it should come back up here. And that's what you're doing. You are basically tripling, no less than double. You're getting double, 2 or 3 times, maybe even 4xing your money when you buy a leap. So how does possible assignment work with leaps? If you have a call, there's no risk of assignment. You're buying a call, right? You're buying a call. Yeah, there's no risk of assignment. Remember, when you buy a call, you have the right, but not the obligation, right? You have the right, but not the obligation to buy the security at the strike price that you determined. That's why it is good. Okay. Very nice. Okay. Have I considered any stock with electric vehicle charging? Tesla. So Byron is asking about Tesla. You know I like Tesla, right? Actually, I don't like Tesla. I just buy Tesla. I'm in there for the money. Who likes Tesla? Anybody likes Tesla? So I had previously stated that I was going to be a buyer of Tesla at 680. Well, that thing came blowing right past 680, and I was like, wait a minute. Why do I need to buy high? Right? So it came down to about $630. It's now at $663. It is still a good buy, even if I had bought it at 680, because I've bought. I'm actually in Tesla at 700. I think at 750 as well. And I've just been buying on my way to getting 100 shares of Tesla. That's my idea. I'm not buying options on it, by the way. I'm just buying shares, and these are not for me. These are for my kids. So, yeah. Now, if you buy Tesla, that's the only EV that I would consider. Rivian is. I'm not sure I would invest in Rivian. Too new, too disappointing. RIVN. Do you have any examples you want to talk about there, Byron? So, yeah, look at Rivian. Rivian opened or IPO'd sometime last year, and it's now down to $28. It brought down with it Amazon, because Amazon invested in Rivian to the tune of $5 or $6 billion. And when this stock came tumbling down, that's what brought Amazon down as well. So to answer your question there, if I'm going to buy any EV company, it's going to be Tesla. Yeah. Lucid, I don't know about Lucid. What's the symbol for Lucid?
Hey, I think Byron was asking about the charging station companies.
Oh, not the vehicle, not the technology.
No, not the, no.
That could be it. I think that's a good deal, because as we adopt more and more electric vehicles, and it's making a whole lot of sense, then that is something that is worth it. And actually, now that you mention it, when I was in Europe last week, almost all the cars are electric. Almost all of them. I was impressed. You're stopped at a stoplight and it's dead quiet. Right? That was amazing. I was just thinking to myself, when I'm stopped on the highway on I-85 in Atlanta, there's a lot of noise around me, and the difference just became very, very conspicuous, that it's the noise and the emission part of it, especially the emission. You can't smell the gas. So it's something that's coming up. I think Europe has already taken what we Americans aspire to be in terms of that environmental friendliness and stuff like that. So to your point, I think charging stations are, or the companies that make charging stations or service those kind of things will definitely be a good. That's a good buy. Definitely a good buy. I would highly recommend that. Let's look at LCID. LCID. What do I think of LCID stock? Well, it's not looking so hot right now. I don't know. What's your experience on that?
Well,
Yeah.
Baron?
You're burned? Is that what you said?
Oh, no, Byron had asked that question.
Yeah, I don't know.
I don't know where.
Well, this chart looks like everything else, so I'm not really sure. But when I look at LCID, I see that it was a penny stock at one point, trading at $10 here. Something happened back in January 12th that made it rocket and then come back down, trade sideways for a little while, which is, this is a healthy. I like these long candles, the V's and the upside down V's. But I don't like these kind of downward movements. So I'm not sure about Lucid. I'd have to look at it a little bit more. So yeah, let me look at my notes. All right, cool. So what strategies do you guys want to talk about today?
Eddie, can I ask a question?
Mm-hmm.
You
Yeah.
talk about how to trade SPY with QQQ or
Yeah.
what do you think? I don't know if anyone else is interested in it.
I would trade it the same as I trade anything else, which is find your support and resistance levels, and then go there. So SPY right now is trading at they closed at 389.63, right? 389. So since this is the last candle we have on Monday, we're probably going to have a new candle, and this is your support at the moment, the 380, right? But if we were to go below that, then we'd be looking for maybe 371 as our next support. In terms of resistance, looks like here price changed at this particular moment here. You can see how price went up and then came down to 408. But how would I trade this? Just like any other one, I'd either wait for it to come back down to 380 or close, and then go long on it on a call, or because these trades like SPX, I think I have to trade these a little bit differently than I would any other stock. Let me consider something like
Hey, before you change the chart,
yeah.
You wouldn't use that same candle, the top of that same candle as resistance since price changed there?
You mean over here the 397?
Mm-hmm.
I started to point to it, and then I thought a little differently. Because this is the current candle, basically the way that I chart is I am always looking for stuff in between, either above or below the last candle.
Okay.
So you notice that I've shaded that 397 to 380. That represents that full candle, including the shadow or the wick, right? So my fast resistance, I think solidly is 408, and my fast support is 371.
Okay.
Yeah. So, but yeah, I would. Right now, it's in the middle of a zone. So if I were, to do a swing trade, I might consider waiting a little bit before I get into it. But SPY is obviously trades like SPX. It has a tendency to move. What's the ATR on this guy these days? SPY is
12?
11. Okay. All right. That's interesting. So, yeah, I might actually day trade SPY. Actually, I do know a few people who day trade SPY. So this is a day tradable one. And then your other question was QQQ, right?
Yeah.
QQQ. Where is QQQ? Right there. Same story with QQQ, which is also an ETF, I believe, the Invesco QQQ. So this one looks like it has some healthy ups and downs. And you notice that everything is coming down, right? So it
Looks
might be,
like SPY.
yeah, it looks like SPY. Everything might be ripe for calls shortly, but we just don't know yet. I'm looking at, let me go back 2 years. So I'm looking for stuff below. What's going on here? I just want to draw a line. Oh, wrong tool. All right, I'm looking for stuff below 280. All right, QQQ, you are in a gap. Do you see that gap right here?
Yeah.
Yeah, it means that this is a, you got to fill this gap somewhere, which is a 4-point gap, $4 gap. Not much, but it means that there's a potential to go down and fill that. All right, potential to go down and fill that. So so Wami says that she did a vertical, or he did a vertical, and it just turned against me the last 1 hour. He or she got confused.
Yes, on Friday.
Friday, okay.
Yeah, hi.
Hey, what happened? What were your strikes?
30, I think 38.60, 38.65. So I think I had plotted to sell at 38.60 and then buy at 38.65, if I'm not wrong. I just busted both.
So this was a call credit spread or put credit spread?
A call.
Okay.
I know. It was my first one.
And this was live?
Yep.
How many spreads did you sell?
Oh, you'll bring me to tears. About 4.
Yeah, sorry about that. Okay, so 38, 60, 65. So she was here, which means that she bought, she sold at the money. You must have sold these when we were down here at 38.10, right?
Yes, and I was looking at the 15 minutes.
And what you saw was that there's no way we're going to get to 38.60.
Absolutely.
So what time did you buy this? This was after 2 o'clock, right?
Yes, way after.
Yeah. Okay. A few lessons here that we can actually help.
Okay.
So first off is you traded on the 15, which was okay.
Yeah.
And you got the direction correct, because when you sold, you were assuming that we would continue to go down, right? And then when the market turned, did you have a stop loss? No stop loss. No. Okay, so you didn't have a stop loss. Yeah, this and then it was a Friday. Friday is notorious for turning around or retracing or recovering. But just to break down that trade is that she correctly got the direction, the momentum was down, and so she sold the 60-65. I'm assuming here she was short 60, long 65. Is that right? Yep. And then as price turned around, what could you have done in this particular case? In this particular case, what I would have done is once I saw that it was going to be breached, that would have been the time to get out rather than take max loss. So I always tell people, do not take max loss. Max loss is very, very painful because it will pretty much take everything out that you put in and much more, especially if it is a any type of credit spread. Just to touch a little bit on spreads, when you're doing those kind of verticals, you do need a stop loss. And the stop loss that I recommend is 2 times how much premium you received. So I don't know how much premium you received, but let's say you received maybe, if you were trading at 2 o'clock,
Because I was not there.
if you were trading at 2 o'clock, I don't think that you got much premium. You probably got something like
Oh,
40,
because
50,
nilikuwa nimetoka.
About 0.8.
but you got 80 cents. Okay, so that's cool. Go ahead and mute. Who's talking? Somebody's talking over there. All right. Anyway, I don't know who's talking. 0.8. So you are looking at 420 times 4. Yeah, that was bad. That was bad. That's about 1680. I'm even surprised that you actually got 80 cents at that time of the day. Usually it is very, very low, closer to 2 o'clock. So here's some tips for you. Try and do it earlier in the morning, earlier in the day, right? Earlier in the day, by around 10:30, you should already have your spread sold, right? Say by 10:15.
Okay.
Second is, if you're still in that trade 1 hour from when you entered it, you need to start looking for a way out. Right? The reason for that is, if it has not decayed sufficiently, it means that the market is not moving in the direction that it was originally moving. So let's say you decided that, or you looked at the market momentum, it's going down, so you decide a CCS is the one that is appropriate, and you get into it. The thesis is that as the market goes down, the value of your spread decreases. And your idea is that it's going to decrease from 80 cents all the way down to maybe even 20 cents or 10 cents. Is that your thesis at that point? Right? That's one thing. Either that, or you are expecting that the market is not really going to turn around, so you're going to expect, let it expire worthless, collect the full 80%. I don't teach that. I always say, once you sell your spread, you need to buy it back and remove the risk from the table, because once the price turns around, then your risk has come back. Because even if your 80 cents decayed to 0 and you thought, well, you know what, this is going to expire worthless, and you walk away from your computer and then see what happens, you get the run up, it expires in the money, you get max loss. So I always say, if you get into a spread, you have to get out, even when you are 100% sure that it is going to expire out of the money. The only time that you let it expire out of the money is, let's say you bought that, you sold at 38.60, and at 3:45 p.m. stock is at 3,800, right? Very unlikely that it is going to move 60 points up in that last 15 minutes. So that's those are your rules. Trade early in the morning, buy back your spread. Have you watched my video on? I've got a ton of them on credit spreads that are public. Watch those and see how I do that. Always buy back your spreads, your credit spreads. Don't let them expire for whatever reason. And then, there's this thing called max loss. Max loss is not in my book. You don't take max loss, meaning that if you think that the trade is no longer good, get something out of it, right? Don't give them everything. And then don't trade after 1 o'clock. Right?
Yeah.
Don't trade in the afternoon. In the afternoon, this is when people are trying to fix mistakes that happened in the morning, right? Or there's FOMO.
What's the difference between this one and the FPXW?
SPXW is, I think that one is on TradeStation. So SPX and SPXW on TradeStation are one and the same thing. Yeah. So that's my advice there for you.
Thank you.
You're welcome. And yeah, let me know if I can help you any further, by the way. And somebody put my email address in there if you have it.
Thank you.
Yeah.
So Eddie, you don't wait in the morning for the market to give you a clear direction, like the first half hour or hour or anything?
I do. That's the first thing that's on my plate to do. I have to know what direction it's going. That is, yeah, that's my guide. I have to know. If you don't know what direction the market is going, you cannot trade, right? So for me, I no longer go in at the first 1-2 minutes. Now that's not a thing anymore for me.
Yes, Eddie, I tell people all the time to play the trend. This is Antoine.
Yeah. Hey, Antoine.
Hey, I see it.
Yeah, you have to actually get that direction correct. And also remember that it's not necessarily correct the whole day, right? It's not correct the whole day. So once you get that market direction in the morning, then just make sure that you're continuously testing your thesis to make sure that it's right. So. All right, Muhammad, that was a good lesson there. Let's see.
So Eddie, when you said don't trade after 1, are you specifically talking about CCS or just in general?
I don't touch the computer after 12:30. That's what my trading plan says. 12:30, if I'm on a computer, I don't even know how to turn it on. Gotta call my neighbor. He's not that computer savvy, so yeah.
I said, Eddie, this is Antoine again. I said, Eddie, it's nice seeing you again. I was like, I said, you're the one that taught me options. So everything I do, I learned from you. Remember, you're my inspiration. Now I be killing the game now. So it's nice seeing you. I didn't see you because they told me, they said, Eddie be on Zoom. I said, oh, man, I got to hit him. I didn't see Eddie in a long time since I was trading July.
Nice. Well, good to see you again, man. I like to see people again. Actually, well, let's see.
Now, for you, now I'm doing the 6-figure trades.
Is that right? Okay. What kind of trades are those?
You hear me? I did Amazon.
Okay.
11,000.
Yep.
I did puts. I had 3 contracts. Eddie, I waited till I got the Amazon. Amazon was all high. Amazon was taking a slow time to come down.
Yep.
I got an Amazon when it was $32 in the green. I wrote it down. And I got out too early. Amazon was negative, all the way to the red. I got out still when it was still green.
Okay. When did you get in?
At $32, and I got out around when it started hitting single digits.
Okay, so all right, so I can see how after that earnings on April 28, it's just been on a downward trend. So 11,000 on one day is actually possible on Amazon.
Yeah, it's easy. Like when the Amazon too, I caught the Netflix too earnings too. When Netflix killed, I made 1,000 off, 11,000 off of the Netflix.
Got it. So what Antoine is referring to, and this is a strategy that day and swing traders can take advantage of, is he's waiting for that high. He's waiting for that resistance to hit and then gets in. The difference between him and a lot of people is that he stays in. You have to stay in almost all day. Is that right?
No, sometimes I'm out by like you. I'm out before 12.
Okay, so you're trading several contracts.
I'm taking the market. You know how the market runs between 9:30 and 12. I don't stay there long when it starts going sideways.
Got it. Okay.
If I go back in the market, rarely I go back. I will play power hour 3 to 4.
Nice. Yeah, so that's a good strategy. I mean, that's a strategy to use if you have that perseverance for me, I'm usually in a trade no longer than 1 hour. So yeah, that's possible, and you do need the patience and the practice. But it's a trade that you can also lose a lot if it goes against you, if it changes direction and you're not paying attention. So to you, Antoine, what I would say is you're
Yeah,
killing
that's
it.
what I'm doing. I'm waiting for confirmation of the momentum trend. I jump in on the directions and I get out before direction out. If I do want to play again, I play defense and I would cash out and then could play another contract going the other way.
Got it. All right. Well, make sure you have a stop loss because you don't want to give all that back, right?
Yeah, I look at it. I don't play. I look at it myself and just cash out. Believe me.
Yeah.
I learned from stop losses. I don't like them because I put in a thing and it bounced back sometimes. So I look visual. Oh yeah, Eddie's nice seeing you again, man. I owe you my life.
Do you want my account number?
I'll buy you lunch, man. I owe you lunch. Eddie, I hit you on Messenger. I owe you lunch.
All right. I'll take you up on it. I'll take you up. Thanks for sharing. That's
I'm
good.
serious, Eddie. I owe you, man. I really owe you.
All right. I'll take you up on it. Thank you. So, yeah, those are some of the success stories we like to hear. You know, at least once you find your strategy and you've practiced it, and it's working for you, and you know the ins and the outs. You know what can go wrong. That's very important to understand what can go wrong, what can go right. That's what you go for. So it's encouraging that you can make that you can make plenty of money to do that. So that's cool.
Hi, Eddie. This is Bobby. Can you hear me?
Yeah, I can hear you.
Hi, Eddie. Will you just recap what Antoine was saying? You were showing on your chart the green where he went to get in.
Yeah.
Will you just recap that what he was saying and what his strategy is, please?
Yeah, sure. So the way that he is trading, and here I'm just assuming that based on the numbers that he is telling us, I'm getting these numbers from looking at the support and the resistance. So I'm looking at the daily chart right now on Amazon, and if I were to draw the support and the resistance, this is the current candle right here. Do you see my cursor right here? You all know the last candle, right? It's the red one, and the fast resistance is the 2316, and the fast support is this one right here at the low from a few days ago, which is 2048. And then let's just draw the 2151.82. That is the current price.
Eddie, we don't see your screen.
You don't see my screen? I'm sharing.
I see it.
We see it.
I'm sharing.
We don't see it.
Okay, I'm sorry. It's me then.
Okay.
I see your screen.
Awesome. Yep. Yeah, I got a big old screen over here. But yeah, what I just did right now was draw my current price, which is 2151.82. Drew my resistance 2316, and 2048 right here is the support. So once you get his day trading, which means that he's not waiting for the price to get to 2048 before he buys a call, or he's not waiting to 2316 before he buys a put. But he's doing straight calls and puts. Is that right, Antoine? You're doing straight. I'm assuming, yeah, that's what he's doing. Straight calls and straight puts.
Calls and puts. Yeah.
So he's intraday trading. So the same way that you can trade on SPX on the, say, the 15-minute candles. So notice that was my high, 2316, my current price. If you get in at this particular moment, let's say he gets in at 21.95. This is Friday, right? Friday we did what? We gapped up, right? If you got in over here, you pretty much lost everything by 1 hour. But if you got
Yeah,
in,
you see where the long candle at? Right there next to that candle?
yes.
I got it right there and wrote it all the way down.
Okay, so if you did that, let's say you got in at 21.90. I'm just going to assume you got in at 21.90 and you went to 21 what? 21.05? So there's
Yeah, I got
$90.
up to,
There's
I got up to
$91. There's about $90 movement in here. So by quick calculation, if you did 3 contracts, that would give you around 13.5 if you went the full length. So how I got to 13.5, I'm doing this in my head. So $90 times 50 would be 4,500 for each contract, and you did 3 contracts, that would be 13.5. Is that right?
Yeah, but I got up too early. I got up when it hit 11.
Okay, cool. So yeah, that would be a good solid strategy. Did everybody understand that math that I just did to estimate that potential profit? It should come naturally now to you guys. So if he's buying at the money, let's say you bought an at the money contract, put.
Yeah, Eddie, I bought out the money right at the line with the out the money, in the money, and above out the money. That first line that highlights. Because remember, Amazon moved fast, so you don't have to go deep in the money.
That is true. So, and that's the same with SPX. Different strategy, by the way, for the high movers than for the slow movers. And we talk about that more in depth in my class about where should you go. But it's always going to be at the money or out, or it's always going to be at the money or slightly in the money.
When I play like NVIDIA and like AMD, I go deeper in the money because they move slow.
Got it. I'm going to mute you here for a second. So, yeah, it's always going to be at the money or slightly in the money. And then the difference here is whether you go the same day expiration or you go a little bit deeper. Because these contracts are very expensive, for example, the 27 May is actually going to cost you $6,000 per contract, then you would need about $20,000 to execute that strategy. If you're going to spend 20 grand, then that is when you stay in for at least a $50 movement, right? And you can comfortably do that because you know the ATR on Amazon is 100 and something. So expecting half of that or 60% of that, then that's when you can comfortably invest that 20K, get your 5 to. I wouldn't go for 10,000. I would go for 5 or 6,000 bucks. But that's just me. We have a different kind of strategy. But that's one way that I would go. So does that help? Was that Rochelle? Who was that?
That was me. It was
Eddie,
Bob. Thank you very much, Eddie.
You're welcome, Bobby. Yeah.
Eddie.
Yeah.
Eddie, another thing too, Eddie, them contracts was cheap for me because I did same expiration date because I knew
Zero DT. Yeah.
Zero DT. So each of them contracts was only 3 contracts was $6,000.
So to 20K at least.
Yeah, same day expiration. You know, on Fridays they cheap. They real cheap. But I knew I could take a chance because I knew what was the trend was. So that's why I could gamble like that.
Yep. So he's referring to these numbers over here. Right now, if you were trading these on Monday, you'd be going with the 27 May contract. So the contract would be a little bit more expensive. But on Fridays, since we have Friday expirations on Amazon, that's one of the days that it moves a lot. And also the contracts are a little bit cheaper. Every time that you go zero DTE, even if you go with SPX, you will notice that the contracts are a little bit cheaper. And these days, by the way, the contracts on SPX are expiring every day. So that's another thing to add. Let's see. Did you mean to look at puts for this trade? That's what Amy is asking. Yes. Yeah. Did I say calls? Yes. You're right, Amy. I was pointing to calls when I actually meant puts. So 2160. You're right, Amy. Thanks for correcting on that. Well, yeah. What's somebody there has a question. Who was that?
Inez.
Hey, Inez, how you doing?
Hi, great. Eddie, how do you figure out the trend? Because I was in that Amazon and I lost. Once it went down to 700 and my heart was beating. I got nervous and I just got out. But then, it went up. I can't remember what. So I'm saying, so how do you determine the trend on it?
That's a difficult thing to do. So, but I'll give you a trick here that I usually use with SPX as well. I always mark the last closing price. Do you see that? I always mark the last closing price. And when the market opens in the morning, it will either gap up or gap down, but the tendency is to want to return to that point. Okay? The tendency is to want to return to that point. So even if you see a downtrend, and when you start seeing some retraces here like this green candle, you know that it's trying to go back up to 2151. That is usually what's going on. The other way is there are some mathematical formulas that do exist that show that a stock tends to move about 1 standard deviation in a single trading session. If you drew your standard deviation, and there's formulas for that I teach somewhere else, or that you can discover on the internet. If you calculate that standard deviation, even if it's a quarter or 0.25 standard deviation, it can do that like 3 or 4 times, and that will be your 1 standard, right? That's 68%. But the trick here I'm trying to say is that once you get your market direction and you see your first or second turnaround, you should be thinking in terms of where did we start? Okay. Right? Where did we start? And once you figure out where we started, then you should know that if we do retrace back, that is where we are likely to end up. Classic example is SPX yesterday and the day before yesterday, right? I'm on the 15-minute chart here, by the way. So yesterday we were talking about 3,900, which has been, a point of a really strong point of. I call it a magnetic point. We've been tending to return to 3,900. So we started not too far away from 3,900, went all the way down, and look at where we ended back up. Right? We are always trying to go back up to where we ended. And this is a doji day. Unless we have a strong downward movement or a strong upward movement that will create, and let me go now to the daily chart, that will create these long candles. This is when you have a very, very defined down movement as opposed to up. But on a day like yesterday and the day before, these were days that just, these are day traders' nightmare, right? Because you got the direction right. At one time, this was solid red all the way to 38.10. And then what happened? Pushed it back up. So,
Thank you.
So yeah, and I'm not sure I answered your question, completely there, because I cannot tell, or nobody can tell the market momentum consistently and accurately throughout the day. It changes. So if you're a day trader, you need to keep watching it. You need to just pay attention to that.
Thanks.
Cool. What's going on, Faye?
This is Tracy. Can you hear me?
Yes.
I noticed something, but I don't know if I'm correct. Those big, when you see those long candles, well, maybe not all the time. Typically, if you see a long red or long green candle, it seems like another, it's like if it's a long green candle, then the next candle is going to go up, or if it's a long red candle, then the next candles are going to go down. Can you tell me if that's anything on the rule book for the Bible, the Candlestick Bible?
Yeah, it's very common to see that, especially when you're looking at the 15-minute candles. Even on the daily candle, I guess you could daily time frame, you could say that. But on the 15-minute, I have also noticed that like here, you have a long green candle, you tend to come back and fill it, right? Or you have a long red candle going down, then you come back and fill it. Well, this is the end of day over here. But it's not consistent. It's not always true. What I do know also, or I've seen consistently, is that we tend to form very, very nice V's and very, very nice upside down V's. We're always trying to go with formations, and that corresponds with the support and the resistance. So I would have to do a bit more testing over there, Tracy, to validate that. What's up, Luis?
I think I just wanted to say that that's part of my problem too, trying to figure out. It makes me freeze trying to figure out, okay, if this momentum is going to stay here, should I get in now or should I wait until it reverses or what?
Okay. Yeah, when you're trading on the 15, I guess what you have to do is look left. Kind of easy to say, but hard to imagine, because if you're here and you are looking left, there's absolutely nothing over here. How do you know that? How do you know what's going to happen? So instead, what you have to do is understand how formations work. What is a bullish candle? What is a bearish candle? And also notice where the next candle opens is also relevant. So you start seeing things like, let's start over here. This candle opens, this is a solid, I'm just going to look at the solid part of this candle, and this candle seems to open below the body of that candle. And that tells you that's a continuation candle. It tells you that we were very, very strongly in there. This one is an inside candle, the green one that I'm pointing to. There's indecision. So you don't have good indication yet about whether to enter the trade or not. The next one, you don't know whether it's going to go all the way down or whether it's going to go up. Notice it has a wick. But once it breaks that level, then you know that your direction is confirmed. It is going down. And that's why you can safely enter. This is actually your signal to enter the trade, because you've already seen that trend. Let's look at the opposite direction on the other side. Here we have a green candle. We opened and closed above. We confirmed the direction was up, and so you can stay in it. Do you see that? So you're always looking to see where the next candle opens and closes, and you're doing that on the 15-minute. You can do that on any time frame, but the 15-minute is really nice, and that's actually how I trade the SPX, by looking to see where did the next candle open, and relative to the previous candle, what formation was that? And then I can look to the left and see what's my next support level or what's my next resistance level. And if I'm on a 15-minute, that helps me stay in the trade a little bit longer. If I switch to the 5-minute, right, there's a lot more noise. If I switch to the 1-minute, there's way too much noise, too many zones. And yes, you can trade in between those, but that's just way too much noise for me. That I'd rather not trade like that. So,
Eddie, I have a question. When you stay in the 15 minutes for something like SPX or Amazon, do you put a stop loss? Because it kicks me out every time.
Yeah, I'm always trading with a stop loss. I think I showed you guys my trades the other day, and all of them except one had a stop loss. Yeah, stop losses are not optional.
So what kind of stop loss do you use on an SPX on 15 minutes that doesn't kick you out?
Maybe 500.
Okay.
Yeah, 500, because you know that SPX moves a lot, right? So if I put a stop loss of $100, it's going to kick me out in 20 seconds, 5 seconds, right? But on a stock like Apple, I can't put a $500 stop loss. It needs to be more like $2 or $200. If it is an Amazon, I need to maybe go even 700 or 500.
Okay.
So it has to be relative to what you're trading. It also has to be relative to your own personal risk. So if the stock is moving against you and you've now lost $500, what do you think? You think you're still right, or what do you think in that case?
You're out. You should get out.
You should get out, right? And if you think that you're right, you're the only one who's thinking that way. Everybody else is seeing different. So there's no need to lose $1,000 and then come back and make 1,000. Now you're at zero and then start making money. No, get out, and then get in at the right place. So stop losses help you not depend on your emotion, right?
So when you put your target loss or your loss at a 500, so what is your target profit? I'm just trying to compare with something I do.
It just depends on the trade. It just
On the
depends.
trade, okay.
Yeah, it depends because I've already calculated what my expected movement is, what my expected profit is. I've taken 60% of that and then decided this is a good risk.
Okay.
Sometimes I will go for very small profit, but I will still have that backside protection. I always have that backside protection. And I'm always shooting for minimum of 10 point movement. Then from there, I can get. I mean, sometimes I will go for 17 to 20 so that I can get the 500. But once you identify your trading plan, which for all my students, you now have my trading plan that I posted out there. You know how to do that math. So, okay, cool.
Thank you.
You're welcome. You're welcome. I'm looking to see for some faces I haven't seen here in a while. Steve hasn't opened his mouth today. What's happening, Steve?
Hey, how you doing? I'm just keeping quiet. Today.
Okay, all right. I was hoping you'd give me an opportunity to bully you, but
Nope.
Okay, all right.
I appreciate the thoughts on the Amazon situation there. I've experienced exactly that.
Yeah.
And in terms of predicting the turnarounds, I stick with a 15 right now. And the problem that you have, and I can understand what the ladies are saying, is that even though you get that turnaround, you're still not sure if there's going to be another one. So then you hesitate, and by the time you hesitate, the market is already taken off in a direction. So you do lose.
Yeah. If you're a day trader, you actually have to watch it and just stay with it. Otherwise, that could turn around fairly quickly. So, big shout out, by the way, to my friends over in the UK. I see a few good faces there. For those that are not in the know, I had a blast. With the people in London. Jamoke, I can see you over there. Thank you so much. But yeah, thank you so much for buying me lunch. These guys took me out to lunch. Yeah, that was a blast. That was nice, and it was a rainy day, but I think we made it, right?
Yes, we sure did.
Yeah, it was a lovely time. I enjoyed meeting with the group in London, and we'll do it again soon. So I have another trip coming up and another one in September, just for business. So. Cool beans. All right, let's see. We have a question from April. How's it going, April?
I'm doing pretty good, thank you.
Hey.
I have a question on implied volatility. And for those of us who may have smaller accounts and may be choosing strike prices that are a little bit further out of the money, should we take implied volatility into account with our choices? Or is that something that you look at or think we should look at?
So if I'm trading out of the money, it better be inside a spread. Are you talking about spread?
No, I'm not.
Okay. Then I don't buy out of the money calls or out of the money puts. But I do realize that there are times when you can do that, especially if you're doing a leap, then you can buy slightly out of the money, not too far. So I think that the IV that she's talking about, let's see whether we're on the same page here. What kind of stock are you talking about, April?
Just regular stock. I mean, Apple, AMD.
Okay.
Yeah.
Let's go with
ones
Apple.
that are a little less expensive, but
Okay. All right. Let's go with Apple here. So she is referring to, got quite a few lines up there. The IV that she's referring to is this number up here. Is that about right?
Let me see. I can't see where your mouse is.
I'm looking at the right side of my screen. Let me. Increase this font size here.
Okay.
Is that a bit better?
Yeah, that's
All right.
better.
Follow my mouse all the
Okay.
way to here.
No, I'm thinking more of if you were to add it to your strike prices, add that column, and it gives a percentage. Like 30, 40, you know. Is there like a magic number for implied volatility that you think one should not, you know, go above or below?
I have never looked at it.
Okay.
So it doesn't play any role in my calculations whatsoever.
Okay.
There is a while back I was following a group that did gamma plays, and I think I remember them talking about IV rank and that kind of thing. There's a famous group that trades entirely on IV rank. But no, I don't trade on that. I don't do the gamma trades. Those are very, very specific. Also, when you're talking about the butterflies, then IV becomes important, right? But for regular calls, regular puts, no, I don't consider IV at all.
Okay.
Yeah.
Thank you.
Yeah, I would rather stick with a simple, keep it simple, go with, high delta, either, at the money or, deep in the money, but rarely, I almost never buy anything out of the money. Yeah, unless it's a spread. Now, for spreads, you have to be sure. Let me first, say that when you're selling spreads or you're buying spreads, you have to buy them, you have to sell them or buy them out of the money. For call credit spreads, put credit spreads, anything that you're receiving money, you're selling out of the money in the black area. Okay. And the best case scenario is for it to expire out of the money as well. So you collect full premium, or your thesis goes very well, the value of the spread has decayed sufficiently, you buy it back, you go home, you've removed the risk. On a debit spread, it's the same thing. You buy it out of the money, and best case scenario this time is opposite. The best case scenario is for it to expire in the money.
Okay.
Right, in the money. Now, I talk in more detail about debit spreads in my class. I don't talk about it here, but in my class, I go into excruciating detail about how to execute a debit spread the safe way, how to double your money every single time. So that's where I discuss. But credit spreads, that's you guys know that from another school, so I don't mind talking about it here. So, but for spreads of any type, you know that also when the price is approaching your spread, the value of your spread is increasing. So depending on your thesis, if it's a debit spread, that's good for you. If it's a credit spread, you need to be getting out. So
Okay. Thank you.
You're welcome. So
I have a question, Eddie. On the spreads, when you're going like far out to get cheaper premiums, how does the volatility and the open interest, how does that help you to choose a better strike?
So the open interest, it also depends on the stock that you're trading. If you're looking at SPX, I'm not ever worried about open interest, right? In fact, if I'm trading anything on my watch list, I've already qualified the stock to be a good one, because I already picked a stock that has a volume of an average volume of at least 1 million. So that precludes thinking about open interest. Is there anybody out there who's going to buy or sell what I'm holding? So I don't really care too much about the open interest. When it comes to the volatility on a spread, I'm usually trying to sell a spread in high volatility. So if I'm trying to do a call credit spread or a put credit spread on SPX, I'm trying to do it as early in the morning as possible once I determine direction, so that I can get the best price possible. I want to sell as high as I can. That's how volatility is helping me. And then later in the day, as the volatility shrinks, or we have what we call an IV crash, right? You might have heard me talk about that. When you have an IV crash, meaning that the volatility has now reduced, guess what? Those premiums have two things have happened. They have decayed, and also they're not as valuable. I guess decay and not valuable are the same thing, but their value has come down significantly. So you can see that you can now buy them back cheaper. What that also means is that if you're in the market for a debit spread, you want to buy during times of low volatility. And the reason for that is because you want to get in at a low price. This time your strategy is to buy low and sell high. So for debit spreads, or for anything that you're paying a debit, whether it's a long butterfly or a long condo, I don't know why you would do a long condo anyway, but for a regular long debit spread, you want to go in during low volatility where the price is minimal. And then during times of high volatility, that's when you can get out. And the only way to do that well is to go in with a bracket order so that when you get that IV spike, you can get your order filled.
Okay, because yeah, that was going to be my next question. What are these times? But yeah, it makes sense to just set the order, OCO or first trigger, and then just wait.
Yep, because if you try to time it by looking at the candles, you're already too late.
Yes.
Right? So time and time again, we've seen that by the time that candle paints on your screen, you're looking at historical information that has happened. Thinkorswim is just telling you, oh, by the way, price arrived at 39.01 like 20 seconds ago, and now you're just seeing it. If you're trying to make that decision at that moment, you're too late. You're too late. So one of the questions that nobody has ever asked, at least on this forum, is do you need a super fast computer? And I have an opinion now. I think you do. I think you need as fast of a computer as you can get, right? Because this is a business first and foremost, and the speed of the transactions that are, you know, that your computer is capable of is very, very important. And the reason I'm talking about this is because I traded on my regular MacBook here, which is, I think it's pretty fast. And I was showing somebody something on their computer. I was like, wow, this is taking forever. By the time we click, you know, things have moved, and they have real-time data. So I noticed there's a huge difference between, you know, the computation power of your computer and, you know, just how things paint on the screen. So as I was looking at my laptop, I was seeing, oh, price has already moved. We are here now. And I look at their computer and like, wow, you're still there. What's going on? So yeah, if you can get a souped up computer, that'll be good.
So does that help to determine how quickly you get in, especially if you're looking for steep discounts? Or does it have to do with your position in the queue? Like if you're just getting in the afternoon as opposed to getting in the morning and waiting?
I'm not sure about the position in the queue. Obviously, if you're trying to sell or buy back a credit spread, you get behind the queue, right? But the speed of execution here is relative to how current your data is. So if you're putting in a limit order for, say, $10 and the price is now $12, well, you're late. But maybe if the price retraces now down to $10 and then you get filled, maybe that trade is no longer good because that you had to see a retracement in order for you to get filled at $10. Then you're wondering, why is it that as soon as I get my trade in, it's red, right?
Yeah, but what if, let's say you put the order in the day before, and then so you'll be at the front of the queue, I guess, when the market opens?
Yeah, but I don't do that. I don't put in on overnight orders. I don't recommend you do that.
I'm talking about like debit spreads where,
oh, okay. For debit spreads, yeah.
Yes.
If you're in an OCO, you want it to go overnight so that in the morning during high volatility you sell quickly, right? Yeah, that does not depend on the speed of your computer at that particular moment. The order is already gone to the broker. So in that case, you don't need to be in control at that particular point. Yeah. Faye wants to know where's my trading plan. It's in my class. It's in my class, Faye. Let's see. How much RAM? As much as you can get. Is that your question there, Roxanne? Roxanne is asking how much RAM.
Yes.
Yeah. So on mine, I have 64 gig.
Okay.
64 gig, 64 gig of RAM. So.
Thanks.
Sure. And because people don't buy computers every day, I mean, they're old the minute it's delivered to your doorstep. So if you can get as much as you can afford, since you don't buy a computer every day, most people buy their computers like what, every couple of years, I think. Yeah. Let's see. I don't see any other pending questions. I just see DMs here.
Eddie, it's good that you said that because my computer died on me. And when I transferred over to Thinkorswim, I had TraceStation and, a couple of other platforms, on my computer, and it actually started sizzling and just went dead on me.
Yeah.
And so I called Thinkorswim, and there's requirements when you get, that you need in order to use their platforms. So they gave me the requirements that I needed, and I took it to, Best Buy, and they helped me get a computer that I needed to use for their requirements, which was very helpful. And my computer's been working just fine ever since.
Nice. Very cool. Very cool. Did they give you any good strategies, by the way?
No. No, but you know what? It seems about right, because I was wondering, you remember how you were saying about all the things that you love about Thinkorswim? You named the 20, 25 things that you like about Thinkorswim, and I was still in TraceStation, and I'm like, man, this thing is it's so slow. It's this and it's that and all that, and all of a sudden, that joker went dead on me. It went dead on me, and I was like, man, I need me a new computer. Yeah. And after I got my computer, I just hooked up with Thinkorswim.
Awesome.
And I've been fine ever since.
Very cool.
I have the RAM, I have the gigabytes, I have everything that I need.
Yeah, this is a business. I assume for most people, this is not a hobby, right? Yeah, this is definitely not a hobby. You need a tool. 3,000 for a laptop seems like a lot of money to buy to watch YouTube and Facebook. You better make that money. So yeah, every time I buy my laptop, I usually spend around 3K. Right, just under 3K. MacBooks are traditionally expensive, but they last a long time. But for what I use this thing for, man, it's paid for itself many times over. So
Eddie, how big is your monitor?
How big are my monitors, you mean?
Yeah, because I do like the big one. I would like to get like the 40-inch one, like the really long one.
Okay. That's kind of on the bigger side. I have two 25-inch monitors.
Okay.
Yeah, I have two 25-inch. I used to have a 34, the curved ones.
Yeah, I like that one. Did you like it?
No, I did not.
Okay.
It's good for many people, for many things, but the resolution on it is so high, it makes the font size so small.
Oh, yeah, that wouldn't be good for me.
And now, once, I'm 21 years old, so my eyes are no longer as good. Erica, you don't believe me?
If that's the case, I'll be 21 as well.
Yes, yes. 21 and a half next week. So yeah, because I'm 21 and I can't see very well, that resolution is just too high. I was like, no, I can't deal with this. So I like my 25 inch. One of these days I'll post a picture of my setup. How about that?
Yeah, I YouTube a lot of setups because I'm just interested in how it looks. But
yep. So I've got my 16-inch MacBook, 25-inch here, 25-inch there. They're spread in front of me. Then I've got my mic, which I put away. Do you guys see my mic? You don't see my mic, right?
no, we can't see it.
You can't see my mic. Well, do you want to see my mic? I can show you my mic. There's my mic.
Okay.
This. So anyway, I'll post a picture of my setup.
What kind of router are you using?
Router, I am using whatever AT&T provided.
Oh, okay.
I have. I don't know. Is that something people check? I don't know. It's just a regular thing. But I do have gigabit speed. I haven't tested it recently, but I'm sitting very, very close to the router. So I will talk about that later on. So
Do you ever trade on your? Oh, I'm sorry.
No, go ahead.
Do you ever trade on your phone, or do you mainly just use your desktop setup?
I don't trade on my phone. Yeah, I don't trade on my. That's. I have tried it, even when traveling. I prefer to have a situation where I have better control, because the way that I trade, since I trade with the charts, I have to use the chart to help me make that trade. And if I can't see the chart at the same time as I'm trading, it's very difficult, on the phone to keep switching back and forth. If I was a swing trader, I might get away with that, but no, I don't trade on my phone.
That makes sense. Thank you.
Yeah, I've had people who say that they trade on their phone successfully, and this is not a hobby for me.
It's too small. It just looks so different on the phone.
So
Eddie, I trade on my phone.
Oh yeah? Okay.
Yeah.
All
I
right.
trade on my phone all the time.
All
I always
right.
have my phone with me and I'm always on the go.
Yeah, that's cool. Yeah, not for me. For me, I need a bit more control. So, but what I say also is that if you have the fundamentals, then the platform really should not make a difference. Because there are people who trade on Thinkorswim. There are people who cannot trade on Thinkorswim because of their location. For example, the Canadians cannot trade on Thinkorswim. I believe people in other parts of the world, may have trouble, But yep.
Eddie, in real, I really hate trading because all your phones sitting there waiting for the trade, even for 2 hours, just constantly sitting there watching. It's aggravating. I can see why people get stressed out being a trader. Even though I made a lot of money, it's aggravating still.
Yeah, you get annoyed making money, huh?
Yes, I do, Eddie. People are like, why are you on the intro? You make a lot of money, thousands. I made a lot of money. I'm like 6 figures, but still, Eddie, still aggravating. Just sitting there watching, I can't staring at the phone or staring at the computer. It's crazy. It's just aggravating. Sometimes it stresses me.
Understood. Yep. Yeah. Whatever platform that you find comfortable with, then that you should just go with that and stay with it. So. All right. It is 12:52. Let's go another 8 minutes at most. Any burning questions that we need to answer?
Eddie, don't forget to message me your Cash App. I'm telling you, I'm for real. I'm going to buy you lunch.
Okay, I'll do that.
Eddie, where do you think SPX is going to go on on Monday? You think it's going to keep going down, or?
I can tell you with certainty it's going to go one of two places.
Well, I know up or down.
That's all I can say.
Okay.
Yep.
All right.
Yep. And
Hi,
and the,
Eddie.
and the reason I say that, hang on a second, is because and sideways too. According to Brittany there, you for the I don't have tools to predict. I don't know that anybody has. If somebody had a tool to predict where this was going, I'd be first in line to buy it.
Yeah.
Right? So anything else that we hear is always going to be an opinion. What I do is I stick with this. I stick with a script of what does my chart tell me that is going to happen, right? Where is this going to go? What do I think is going to happen based on the chart? And if the chart is not supporting, if it's not supporting my thesis, then that's I can't go with it. So
Thank you.
cool. Somebody started to speak. I had a voice.
I have a quick question.
Hey, yep.
Okay, my question is simple. Now, earlier on, you spoke about the out of the money, that you do not necessarily go out of the money.
Yeah.
But using the out of the money as a risk management idea, being somewhat out of the money, and then which means that your premiums in effect will be smaller, with the intent that over time, or during the course of a day, it would grow.
Sorry, back up a little bit again. I got distracted there for a second. You're talking about other money, calls and puts.
Yes, calls and puts. Basically,
Okay.
either out of the money, calls and puts, with the intent that over time it would grow with fast-moving stocks such as Amazon or Tesla or Google. And so you get out of the money, but it grows over time, but your risk management is kept in check because now your premiums are much cheaper. What are your thoughts on that?
It's a bad strategy. If your risk management is based on the moneyness of the trade, then you don't understand risk management. Risk management is about protecting what you can potentially make, not restricting how much you can potentially make. And when you go out of the money, you're basically saying, I don't want to make that much money. In fact, I'm all right to lose it, because if you go, let's assume you go with a delta like a delta 20, delta 30, right? Because it's cheap, because it's inexpensive. First and foremost, if you're buying 45 to 90 days, you're now fighting with theta, because at that low level, the theta is killing your premium even faster than anything else. The price of the underlying has to rise exponentially for you to keep up with that. Right? Now, it is possible on a fast-moving stock like, say, Amazon, to get from 30 to 50, and then from there you start growing, but not as a risk management strategy. The only reason you would go with an out of the money is because I'm trying to think of a reason why you do that. It's a longer term. It's a longer term expiration. In which case, that you have good thesis that it is going to move from its current price, and within 20% of that volatility, it is going to get in the money or at the money.
Correct.
But no, I wouldn't use that as a
the risk management aspect is a byproduct of the process. That's not the motivation or the driver for the actual strategy.
Okay. All right. If you preface it with that, yes, that's okay. But I still would not recommend buying out of the money.
Okay.
Yeah. I'm pretty adamant about that one, because for one, I've seen both cases. I've actually tested, a lot of out of the money scenarios. Especially if you're a day trader, by the time you get to in the money or at the money and get into that trade, it's a long time. Price has moved. So just to give you an example or a use case for that is, a lot of my templates are usually going to be get in at the limit and then add $1.50 to that and get out, or add $2, right?
Mm-hmm. Yeah.
Let's say I use my template that says whatever limit plus 2.
Mm-hmm.
What does that say? It means that I'm expecting the price of the underlying to move about $4.
Okay.
Why? Because I'm at delta 50.
Yeah.
I'm always buying delta 50 and above. So if I'm at delta 70, all I need is about $2 or $3 in order for that to mature. But if I bought a Delta 30, that plus 2, I would need a movement of at least $6 to $10 to get there.
Yeah,
Do you see?
granted.
Do you
Yeah,
see? Do you see my point?
yeah. But the idea is that now you're basically limiting your outlay first and foremost, and incorporate a bit of risk there. But yes, your profit in effect would not necessarily be exponential. It would be moderate.
It would just take a long time.
It will take a longer time, and just keep it moderate basically until you manage to build up your account. In effect.
Okay, and time here then would be, I guess, relative to your tolerance on that. My opinion, I think I want to make the most efficient use of that time. I know that what I'm trading has a potential to turn around very, very quickly.
Yeah.
Right. Very, very quickly. So since I'm trading in 15-minute increments, will I see that return within that time? If it's a yes, get in. If it's a no, then no go. You'll pass on it.
Yeah.
But from my experience, in the money or slightly in the money or as deep as in the money that you can get, that is the way to go.
Fantastic. Thank you.
Sure.
I'll review the answer again when you post the video.
Cool.
Outstanding.
All right. Let's see. When is my next date for the next coaching Saturday? So Faye, I usually go 1 week. I skip 1 week and it's every 2 weeks. How about that? Every 2 weeks. Unless there's a holiday or it conflicts with something else, then, but in general, it's every couple weeks. Every couple weeks. So, all right. Emily Jackson, have a good one. All right. Any other last closing questions there?
Hey, Eddie.
Yeah.
When you start learning cryptocurrency, is that something that you're going to be teaching?
No.
Okay.
Very unlikely.
Okay.
I'm not in love with crypto.
Okay.
Yeah. I think my next, or rather my current gig is helping me out. So I don't have a strong need to do crypto. If anything, futures is what I will be teaching. Right. So, and I've talked about it. I've told several people that come October I will be having a futures class, but not crypto. So, yeah.
Eddie, let me know when you do futures. I want to learn it.
Yeah.
It's in the future, man. It's in the future.
Eddie, you remember when the year before when I first started the coaching class, you told me I was an aggressive gambler on the market. You must don't remember. It was a long time. Because remember, I used to buy options the night before and try to play the pre-market games. And you was like, you crazy. Remember, you used to tell me I was crazy. Like, you say, don't do that, Antoine. Don't do that. Don't ever do that again.
Yep, don't do that. Hey, Antoine, here's where you can buy me lunch. I just sent you my cash app.
I got you.
There you go.
I owe you, man. I made a lot of money. You taught me how to do options. Thank you. I'm grateful.
Hey, you're most welcome. I'm happy to help.
Eddie, now I'm up with $250,000.
You look nice. You want to race to it?
Yeah, I'm trying to invest in the house.
Don't race. Go slowly but steadily.
You know what? What's his name? Terry and them kicked me out the VIP because they said I was doing earnings. Sometimes I did earnings on the options, but I killed them. I did Amazon earnings. I did Netflix, and that really boosted my account.
Yeah, I think, well, I do have an opinion on earnings. Earnings are great if you know how to play them. And if you don't, I would say stay away from them because there's a lot of manipulation that goes on with earnings. A lot of people are trading on inside information. They have an idea that it's either going to drop or it's going to perform a certain way. It's just not public information. There's not enough information out there posted well in advance for people to understand. And that's why you can see, companies like Nike, they will report earnings and then shoot up, right? Or Amazon, which is a good, strong company. How do you explain that just one earnings report will cause it to drop 300 points? right?
I know. I rode that wave too.
Exactly.
That's really Amazon and Netflix really boosted my account. I think that wave alone brought my account to like $80,000-$90,000.
Right. So yeah, that's why I like to stay away from that. So. All right, guys, I am going to end this call. So if you need or would like some help from me, I'm available to help. Options with Eddie is that's what I options. I'm trying to type over here. Options with Eddie.
Put it in there, Eddie.
You did? All right, thanks. Yeah. And the website as well. So.
Yeah, Eddie, nice seeing you, man. That's my boy Eddie's back. Forget Terry and them Eddie's you.
Thank you, guys. All right, guys. Let's play this bell one more time. That market is gone.
Thanks, Eddie.
Right.
Bye.
Thanks.
Bye.
Bye. Thanks, Eddie.
Bye.
Thank you.
You're welcome. Bye-bye.
Bye-bye.